What's up, guys? This is a daily recap for Wednesday, August 19th. I'm going to show you the thought process and the market process on today's New York session. So coming into the market here on a 5 minute time frame, that was my first thing I was looking at. If we were to zoom out to an hourly time frame, it looks bullish, right? We understand that we have a bullish displacement candle. We're trading away from a respected bullish order block. That order block can be seen right here. We traded down into it and shot up higher before market open. What is the current weekly trend, though? We have been seeking, we have been selling off aggressive, right? So I was also open to the idea that we could see further shorts, and I'm going to go over that with you. So our analysis was, hey, if we're going to be bullish, this is open power of three rebalance, continue trading higher. That's the option for bullish continuation. But the issue with that is the clean sell side liquidity and also not calling a bottom. So we're going to talk about our curves again in this video. Here is the original consolidation. In order for it to be original consolidation, they need to break it and retest it, which you can see they do. So here we break it, retest it, shoot up higher. That's a quick price run higher. Manipulation is usually done quick. So at market open, we were on a 3 minute time frame. We see the market open here at 9:30, bullish candle, big wick. I'm watching the next candle to see if it can close bearish engulfing, which it does. The very next candle opens up. At that moment in time, I'm saying, hey, if they're going to continue printing this lower, I'm watching right in here in the form of a bearish EOB. That could send us down here to take out original consolidation. All right. So if they respect this EOB, which they do with the next candle, they start sinking lower. That's the sell side of the curve. So we have the curve. That's a swing high. Here's the bullish buy side of the curve. Here's the bearish sell side of the curve. I want to see bearish PD arrays be physically created and physically respected on this bearish side of the curve until we take out original consolidation, aka sell side liquidity. I did not jump in on the 3 minute EOB like I really wanted to, so I had to improvise and find a way in the price run. If we look up real quick, hold on a second. Skimming through time frames. Where was our entry today? Okay, yep. Let's go back here. We have this bearish fair value gap here on the sell side of the curve, which blends with the bullish fair value gap on the buy side of the curve. This is where IFVGs are actually useful when there is context behind it. So we're waiting for the fair value gap entry up here in order to go short, which they give us that. We go short, we run out original consolidation. That's the beautiful IFVG right there. But it blends with the PD array on the buy side of the curve. That's what gives you high probability. And then obviously run to the lows and through them. And then we also took out the daily low over here. Okay. So that's one trade that we took on stream this morning. Let's implement our midnight opening range, which can be seen here in the blue shaded area. We understand that if they're going to be trading any lower, where's the most immediate PD array? Go to a 1 minute time frame. I was telling everyone if you're still in shorts, you need to be managing and taking something off the table down here because this is a no wick sell side inefficiency that they're most likely wanting to pull back up into, which can be seen right here. If they're going to make a lower low, they should fill this, blend it with the midnight opening range, and continue trading lower. What happens? They come up, hit the midnight opening range, fill in the 1 minute SIBI, and then they make a lower low. So that's your 10 a.m. trade opportunity. Right here at the high, where's the PD array coming out of the SIBI? Swing high equal bodies. There's the rejection block. Not many people are going to be able to see that, but I was calling that out in real time today. And then we make that lower low. Sell side liquidity sweep. And then what happens? We inverse this fair value gap. which means nothing to me, to be honest, because look how far they dug down before going back up. That just proves to you that that IFBG means absolutely nothing. But where's price going? Price ends up coming back up above buy side liquidity. Now it's the lunch session, okay? We're going into the lunch session, 11 o'clock. Price should be in manual intervention from 11 to about 1:30. So you're not wanting to trade this because the damage has been done, okay? But this is fun. We did note this also. Here's that midnight opening range. If we zoom out to a 5-minute time frame, we can see what is it blended with. The damage has been done on sell side liquidity. Here's your last down close candle. Bullish displacement, open, power of three, rebalance. They respect that bullish PD array and we displace again. Then we come down. You could be scalping this setup right here. There's a 5-minute bullish fair value gap right here inside the midnight opening range. Look left, IFBG, and look to attack some form of buy side liquidity. It can be equal body swing highs, which here is an area right here, or it could possibly be even the high here. What's price end up doing? Gives you both of those levels coming out of the 5-minute FBG here, which was blended with that midnight opening range. That's another opportunity. This is where my experience shines the most. It's currently 12 o'clock and we keep making higher highs. We keep making higher highs and then we jolt it up above these highs here. This is where I shine. You ready? Where is the sell side liquidity? Well, we know that people are going to be trailing their stops at this low. We just now took out buy side here. People are going to be chasing longs because they believe price is going to make a new daily high. This is why all time frames are important. I called this out to the free Discord and my premium Discord. I said, do not chase longs anymore because we have the hourly swing low equal bodies with the big wick. It's one of my secret zones. Those always get filled in, especially if we're not trending. They're holding price tight. So I'm anticipating price to come down here and hit this equal body swing low level. What makes it important is the fact that we have the long wicks with it. Okay. So if I believe price needs to drift down there, I can be on standby for any signs of a short because we have sell side liquidity also. Now the IFBG makes sense. We displace lower. It's a brand new hourly candle at 12 o'clock. We displace lower. Next candle rebalances that bearish displacement. But if you look left, it's also the IFBG after running out stops, buy stops. Then the IFBG works. Why does it work? To get us down to the hourly equal body swing low. We stop just shy of it, come up some. Where do they trade up into? Probably some form of a bearish PD array. Yup. Same with the turtle soup up here at the high. Look left, bearish for value gap. And then we break on down. We stab up, look left, bearish fair value gap. Just to do what? Just to come lower to hit the hourly swing low equal body, which got hit here. It's just ironic. Look what happens as soon as they hit that. Immediate bounce back to the upside for 90 points. Little bullish fair value gap in there. That offered a little play also. Ran out the high. And then we come back down. Hit that level again. Take out that low. And then the last little macro before the daily candle closed offered a little bullish pop. Go to your 2-minute time frame. There's a 2-minute bullish EOB after running off these lows here. Also hitting the hourly rejection block. Down close candle, big wick, bullish engulfing. There's a 2-minute bullish EOB right here that offered, how many points is that? Roughly 50, 60 points. And you can make a lot of money off of 50 points just to pull price back up to close out the day. But yeah, that's today's recap. Those are all the important key levels that I noted today. I pretty much watched all of this unfold. Um, I was watching price all day today. But yeah, good stuff. Good stuff. That 5-minute FBG with the midnight opening range. That was right here. Look at that. Beautiful pop. You can profit just off that. There's the midnight opening range. Beautiful stuff. Before making a lower low, they come up to the midnight opening range. Look at the red dotted line. That's 12 a.m. True day open. They ticked it, then made a lower low. Take out sell side, change state delivery back to the upside, pull back, bullish PD array. They tick it again, the red dotted line with a PD array, and then they jack price up. And their engineering sell side, we get a pop above highs into a 15-minute bearish fair value gap. It's like ping pong. That's all this is. Ping pong. Here's that bearish fair value gap. And then they break down. And then you get your IFBG short to go where? Here's the IFBG short. Just to go down and take out sell side and hit the hourly inefficiency. Nobody knows about this. That's why I love it. This is inefficient. This level right here, the equal body swing low. And then when lower time frame confirms it that, hey, yeah, we're going to do some bearish signatures because price does need to go down there. How many points was that set up right there? I wish I would have took that trade. That was a 120 point run. There is all types of trades throughout the day, and the more you know, the more you can play. But it will get dangerous, okay? So you need to be very, very careful and be selective on what you do. And as always, less is more. And hope you guys like the video. Bye.